I hope now at least people learn something. See this beautiful, beautiful short position. Look at how things are naturally declining. Well, this is not a surprise. If you have been following and subscribing and have been listening for the last at least 3 days, you most likely did well. Otherwise, if you was arrogant and you keep talking back, oh, it's not gonna crash, it's gonna be good, well, I'm sorry about you. Anyway, I want you to pay very close attention. How the heck silver went from 120 down to currently crashing even under 68. And this is not over. If I zoom out, I will give you even better understanding what you could expect. Because do you see the neckline? If I zoom out, you will see this very important neckline over here. So this neckline is important because every time when there was a healthy pullback on trading terms, means the market takes a breather. Big institutional investors taking profits, and from this level, which is the healthy pullback neckline, people who believe that there is more inflows to push the market up again, they will buy. The problem is that the market went under the neckline. It broke through the neckline, which broke the previous lows. If you look at last week, we had another dip 40%. Remember this very well, right? And I made a video. You can just check everything. I made a video. I showed you in 2022, in February, the exact same month, we had the same exact chart, the same exact pattern. The market dump. Then it was a sharp reversal in the morning. And I told you, guys, everyone believed that that was it. No more dips in 2022. And the market did exactly what it did today. Dip even lower. And from here, my personal opinion, just looking at the chart, we'll be looking at lower highs and lower lows for a very, very long period of time. We might see consolidation. It might be like something like zigzag, not sharp down, sharp down, sharp down. It will not be probably as fast as it dropped now. It dropped for 10, 12 days max. It fell from 123 down to 68. It will go even lower. Today lows, we saw it 64. Even tech stocks, even AI stocks are not falling that fast, that big. What is this telling you? This is telling you that there is a major weakness and fear on the market about precious metals. Because obviously even the biggest, believers understand that when the market goes south, when the fear of recession becomes real, these are going to be the first things that people are going to dump. Probably alongside some of the crypto speculators as well. We have to be fair and honest. There are a lot of crypto that have no intrinsic value, companies that building blockchain systems but operate on losses as well. But this video is particularly for precious metals because I see here a lot of downside that I don't really think that it will be a sharp reversal. And for people that are not familiar, like every time I note, because this is a very important case study. People who bought the previous run-up in silver 20 years ago, they waited 20 years just to break even. I found this heartbreaking, right? Regardless of how much money you put into any investment, I find it heartbreaking that you should wait 20 years just to take your money back and not, write off the loss. Because remember, the tax law doesn't allow you to write off more than $3,000 per year. So if you lost more money, sure, you can drag the losses for the forward years, but this is simply, ridiculous. It all comes down to overhyping, not thinking, and acting like, animal spirit, they call it on the market. So pay very close attention. What we're looking at right now is that if this weakness persists, which most likely it will, because just look at the candles, we're currently at a 4-hour chart. There's barely any green candles. Just look at how small the green candles are. So if you look at how small the green candles are, this simply indicates that there are barely any buyers. And because of the red candles are so huge, followed by small ones, means that this is cascade liquidations. And if you remember earlier video we watched from Shanghai Exchange, they knew that this is coming. So on the Shanghai Exchange, they have circuit breakers that are similar to the New York Stock Exchange. In New York Stock Exchange, the circuit breakers are essentially an automated system which pauses trading when particular security it's up 20% or down 20%. So in Shanghai, they actually felt that there is a big volatility to the downside for silver. And this is why they restricted a lot of these buys. Right? They restrict a lot of these sales. They restrict a lot of the trading pattern. So they didn't let to fall even more. Because remember, especially we're here on EST time zone, right? For us, a lot of things will happen overnight. What happens during the normal trading hours in Asia. So for us, it is very important to actually follow and understand why something is happening. And the reason for it is simply panic. You know? Like I said, especially on the precious metals market, there is no intrinsic value. When we're not talking about the actual physical assets, right? We're talking about paper trading. So this is very important. Also, a lot of investors are pulling off money, right, from the markets. So if I scroll back and if you look at the last week, January 26th, look at this 40% move. And I'm gonna ask you something very, very honest, very clearly. You don't have to have a stock market experience, finance experience, banking, whatever, to understand that it is less likely for any security, stock, or precious metal to recoup the same 40% losses in a week, in a month, right? When you have a 40% sell-off, this means that everyone is running for the hill. This is not 3-4 companies dumping their positions. This means that the people who built the move on the way up are now building the move on the way down. So are these people going to purchase the same size of the position? Less likely. Why? Because when they were building this position, when silver went from 40 to 50 to 60, the market was doing well. AI stocks were doing well. Earnings were doing very, very well. The government, geopolitical, everything was doing well. Now everything is on the flip. So we flip the switch. Now AI earnings, AI companies, software companies, Big Mac 7, boom, everything is down. The recession fear is increasing. Fear and greed index is extreme fear. You know what's funny? The stock market is down only 1.7% from the recent highs. It's not down 5%. S&P is not down 7%. It's down only 1.5% on average. And people are already at extreme fear. We're talking about S&P 500, which historically is always going up. It always recovers. And people are not stupid. People wonder still up to this day why Warren Buffett stays in cash. Why, when he was leaving as a chairman and CEO of Berkshire Hathaway, he didn't actually bought the dip of any stocks. In fact, he actually sold large chunk of the remaining positions of Berkshire. Sure, you can make up the case that he didn't want to leave the company by making some bad decisions and effectively destroy his image throughout his life, but still, he made a very interesting strategic prediction that the markets will underperform for the next 10 years. He said that the big long-term debt cycle in the US has already peaked, meaning that so far the cycle was not at the peak. This is why the market was uptrend, was downtrend, uptrend, downtrend, and still overall the market was doing very, very well for the last 20 plus years. But now market has, the cycle has matured, the long-term debt cycle has matured, something that Ray Dalio talks about. So this is going to bring another at least 10 years of downtrend movement. This is what Warren Buffett speculates. I don't really know or believe in this, but there's something that you should definitely study and do a little more research on.